Welcome back to the channel, everyone. Today I want to talk about how and why the hedges are forcing AMC's current price behaviour and what impact that has on the future of AMC and the future for those hedges. So stay tuned and let's make some money. And now I want to dive straight in with the key information. So let's start by talking what is actually happening and what the hedges are actually doing, and then a little bit later in the video I'll talk about why they're doing it. So basically the hedges are currently forcing the price of AMC. They're trying to manipulate the price of AMC exactly the way they want it. Obviously, at the moment, the wider market has been very volatile and has been falling overall. So they're trying to force AMC's price downwards to make AMC look like a worse investment than the rest of the wider market. Basically, what I'm saying is that if the hedges weren't forcing the price of AMC, it would not be falling with the wider market. What do I mean by that? Well, when you look at the wider market and it starts falling, what happens? People panic and tend to sell their shares. If Microsoft, Facebook and Google start falling, people start selling the rest of their blue chip stocks and all of their other stocks in order to try and hedge themselves against a market crash. It's a bit of a self-fulfilling prophecy. When the wider market starts to drop, everybody kind of panics and sells their shares, and then the market drops further. But with AMC, that's obviously not the case. When AMC starts to drop, us apes have been buying more and absolutely not selling our shares. Obviously, a few months ago, the paper hands did potentially sell their shares, but right now, everybody holding AMC has diamond hands, and therefore, AMC would not be falling with the wider market. And therefore, the hedges are having to force AMC to fall with the wider market and fall at a greater rate. They're having to basically step up their game and increase their shorting and manipulation in order to make AMC look like it's falling with the market and falling even faster than the market. At the moment, everything has been pointing towards AMC wanting to go up. AMC is very oversold. The MACD is at all-time lows. AMC has a negative beta and therefore wants to move in the opposite direction to the market and move upwards, but it's being curbed by the hedges, forcibly shorting and selling additional shares in order to crush the price even more. And I can prove this to you as well. Over the last 2 weeks, while AMC has been falling, the volume has also been increasing. Instead of over the last few months where we've seen this general downtrend in the volume, it's now reversed and the volume is going upwards. But the price isn't going upwards, the price is going downwards. Now, this is obviously a stark difference compared to what we saw in May. As the price started moving upwards, the volume was moving upwards alongside it. But right now, the volume is moving upwards, but the price is going downwards. So how can that be? It's because the majority of this volume isn't people buying the stock, it's the shorts shorting more of the stock. Now you might say, well, Tom, isn't this just because the market is very volatile at the moment and that's why volume is up across the board, not just in AMC? Well, if we start by looking at Tesla, we can see basically the exact opposite. Volume has been steadily decreasing since obviously late October. If we look at Microsoft, there's no real trend change in volume. Potentially you could argue that over the last week volume has been higher, but there has also been many days where volume has also been higher, and there's not really this stark giant increase in volume like we've seen with AMC. While AMC was trading flat towards late November, we were seeing days of 28, 27, even 19, 18 million shares of volume. But now today, we saw a whopping 106 million shares traded. Guys, right now you can currently get 5 free stocks valued up to $3,500 each and be in with the chance of winning an iPhone 13 Pro and many other goodies every single day this month until Christmas. So I wanted to break down how you can get all of these free stocks. Obviously you have to sign up to Moomoo using the link in the description below. When you open your account, you get your first free stock valued up to $3,500. When you make your first deposit, even if it's only a single dollar, you get your second free stock also, obviously, worth up to $3,500 as well. Now, if you deposit $100, you're in with the chance of winning an iPhone 13 Pro and many other goodies every single day this month until Christmas, so be sure to check back on Moomoo every single day. And if you deposit $2,000, then you get those final 3 remaining free stocks, all valued up to $3,500 each. So that's potentially up to $17,500 in free stocks and a free iPhone 13 Pro to give to a loved one this Christmas when you sign up for Moomoo and make your first deposit. I think Trump's ramp dump on Reddit has cottoned on to exactly what I've just been explaining. He said the hedgies are not pushing down the price to scare you off. He said they are pushing the price of AMC and GameStop down more than the rest of the market to be able to meet their margin calls. Obviously, AMC wants to move upwards. This would cause their short position to move against them and they'd lose even more equity and therefore fail to meet those margin calls. And therefore they're trying to crush the price of AMC even more by increasing their short position and shorting more shares in order to push the price down of AMC to make their unrealized losses reduce or their unrealized gains increase. As the market goes down, their overall asset position and their overall equity position is going to decrease, and therefore they'll need more liquidity to meet their margin requirements. The easiest way to do that would just be to lower the price of AMC to increase their unrealized gain or reduce their unrealized loss. The issue with that is that the apes just keep on buying up the stock, and therefore they're having to short more and more and more in order to try and force the price of AMC down. He said they're not bringing the price down to scare off the apes, but because they cannot afford to keep their AMC positions at higher prices. They can't afford to have all of those unrealized losses still sat on their books, crushing their margin position and potentially stopping them from meeting those margin requirements. But the survival interval between manageable margin requirements and the cheap stocks for apes are getting tighter and tighter. As the market continues to fall, their overall margin position is going to get smaller and smaller, and they're going to struggle more and more to meet margin requirements. But all that's going to do is decrease the price of AMC potentially even more and present for us even more buying opportunity. He said, don't believe for a moment that they are having a good week. It could not be further from the truth, as we've got them pinned up against the wall. And on top of this, Citadel has less than 3 weeks to reduce its liabilities and its unrealized losses for its 2021 financial report or financial statements. He said taking down the price until December 31st could be a necessity for them to keep kicking the can down the road. Obviously, Citadel borrow a lot of money from other institutions because they're 6.8 times leverage, and if in their financial statements they're showing huge unrealized losses or massive realized losses for the year, well, obviously their lenders aren't going to be too happy and aren't going to be too comfortable lending them money. Again, same thing for the investors. If Citadel are showing huge unrealized losses, well, their investors aren't going to be happy with their returns for the year and could potentially take out their money after the year end. I personally think that Loopring could be a giant catalyst for GameStop and ultimately for AMC as well. Obviously, the hedgies are trying to do absolutely everything they can at the moment to manipulate the price of GameStop and AMC downwards in order to reduce their unrealized losses and basically make GameStop and AMC move in line with the wider market and worse than the wider market. But when they announce their partnership, it's going to bring a lot of publicity and media attention to both Loopring and GameStop, and all of that publicity is going to drive the price of GameStop and Loopring up. Now, because over the last 2 weeks, the hedgies have been trying to do everything they can to crush the price of GameStop and AMC, when the price moves upwards quite violently, those hedgies are going to find themselves very quickly in another unrealized loss position. And again, it's then going to make it twice as hard for those hedgies to meet their margin calls because the market is still going to be moving downwards, but GameStop and AMC are going to be moving upwards. Now, I also wanted to quickly move over to the Chinese property market and talk about just how corrupt the financial system really is. So the last bear standing tweeted saying Shimao raised $748 million of 6-year USD unsecured bonds with a 5.2% coupon. This was rated investment grade or AAA by Fitch on the 16th of September 2021. Less than 2 months later, the bonds trade at 63 cents on the dollar and have almost halved. This sort of thing just doesn't happen much. It's the result of excess liquidity, financial products and packaging, misaligned underwriting and denial. Property developers could never fail en masse so long as this dumb money spigot was turned on. In simple terms, in mid-September, investors lent the company close to $1 billion for 6 years. Despite contagion spreading throughout the markets, Fitch still gave the product a AAA rating for a capped return of only 5.2% and full downside risk. Obviously, the risk that 100% of their investment could be lost. Those investors have lost 40% of their money in the first 3 months. And finally, I just wanted to let you know, anyone that's invested in cryptocurrency is currently very, very rich. The price of Bitcoin has just increased to $778 billion per Bitcoin. Bitcoin is currently up 1.6 billion% over the last 24 hours. Ethereum, on the other hand, is trading at $9.1 billion per Ethereum coin. Now, this comes at a very interesting time after Senator Elizabeth Warren just gave a speech talking about stablecoins posing risks to consumers and to our economy. Obviously, Senator Warren looks like she wants to increase regulations around crypto and around stablecoins specifically, so it's a very, very interesting timing that right now the prices on CoinMarketCap have decided to glitch or become hacked. Guys, be sure to let me know down in the comments below what you think about the hedgies forcing the price and the behaviour of AMC. And if you want to stay up to date with all of my new stock and crypto picks, or if you just want some help with AMC and GameStop, be sure to check out the Patreon and the private Discord, linked in the description below, and become part of the team. And as always guys, if you enjoyed this video, be sure to check out some of my others. Alternatively, subscribe to the channel and ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers!